Everybody, welcome back to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr coming to you from the live trading room in beautiful Southwest Florida, where it is rather muggy and humid today, but that is typical this time of year. And I'm joined by a very great group of amazing people, all kind and supportive and helpful and sharing what they're seeing in the market. And I am in there every day from about 8:30 to noon, and then again 2 o'clock to the close. And I share everything that I'm trading. I give you my entry price, my stop price, my target price, reasons for the trade, a technical chart if you ask for it. And I keep track of those picks. And if you want to just mimic what I'm doing, you can. If not, you can use some of my ideas and spin them off into your own direction. So it's all good. And if you're interested in joining us, go to drstoxx.com. That's DRSTOXX. Been in business every day since October 2002. And if you go to the subscribe menu, you can sign up for one of our award-winning stock pick advisories or join us in the live trading room. And if you want to add on the brand new live options room, you can do that at a discount. Okay, so here's what we're going to do. First of all, I want to show you something. I got a big box in the mail of some swag. I have a friend who is in the ETF business, and he owns a company called Rex, R-E-X. And every now and then he comes out with a new exchange-traded fund. He's got a whole bunch of interesting funds, which I'll talk to you about in just a minute. But he sent me some swag. So he sent me a, hopefully you can see this. This is a cap, a baseball cap with two of his ticker symbols on there, shiny and dull. Any guesses as to what those ETFs trade? And if you guessed shiny metals, i.e. gold, you're correct. Shiny is a 3x bull version of gold, so you want to buy that if gold is going up. And dull is the 3x bearish version on the way down. Here's another one that I just learned about. I think this is maybe his new one, FEPI. The F stands for FANG, and I'm not sure what the other letters stand for, but it is a fund, and I don't know exactly what's in there, but it is the FANGs, right? The MAGs, the big, there are at least 7 of them. I'll have to see what the holdings are, but it is a fund that tracks the MAGs, and it is a leveraged fund. Now, we used to trade FNGU, and then for a short period of time, it changed its ticker symbol to FNGA, don't know why, and now it's not even trading at all. So we kind of lost that FANG exclusive fund on a leveraged basis. There's still BULZ, but it has a few other stocks in there besides just the 7 FANGs. So FEPI might be a very good way of trading that. Again, I also have a nice T-shirt, if you can see that, right? Nice wicking kind of material T-shirt, and he sent a pen and a little football and all kinds of fun stuff. So I want to show you some of the charts of those indexes because they're kind of new to me too. I want to see what they look like. All right, before we do that though, let's jump over to the index charts in TradingView, and we'll take a look. This is a kind of a sad chart here because we were in this little small cap I think it's a biotech. And we played the breakout, right? So we got this little breakout here last week. We sold up in this area right in here, 950, 960, something like that, and took a nice little, very quick turn trade. I just didn't want to hold the shares over the weekend. I thought it was a little bit too much risk. Also, that red candle there, you know, after some pretty heavy volume was a bit concerning. So we got out, and then of course it's up and up and up. Huge the next day, but that's how it goes with trading. Hey, you'll never go broke taking a profit. You will go broke if you hang on to your losers too long. So my worst vice as a trader is that I hang on to my winners not long enough. But I am very good, I have to say. The reason why I've been trading for 23 years and have been profitable for 21 of those years is because I sell my losers quickly. Boy, if I could drill anything into your head, any one rule, it is that sell your losers quickly. But I'm with you. I'm trying to hang on to my winners a little longer than I normally do. Okay, let's look at some index charts. So we can look at the S&P 500. For all of the major indexes, with maybe the exception of the small caps, we really need to have a bit of a pullback here. The market has been rallying very nicely off of the April 7th lows. That was a clear overreaction to the tariffs. There was a lot of uncertainty, there was a lot of negativity, and a lot of scary headlines out there, but most people knew that that was an overreaction. It was right up from there. We had a higher low. We had the breakout a couple of days later. And then we've had these really nice intros, these really nice setups on the way up, right? Nice little 4 or 5 day, we'll call it a flag, right? With a breakout, boom, big move up. Here's a little bit of a pullback, 4 or 5 day pullback into the 21 period moving average of 200. Boom, another nice slow rally higher. Here's a 4 or 5 day flag down into the 21. Boom. So we need another little pullback. And my thesis is that we'll get it toward the end of this week and beginning, and it will carry over into next week after the 4th of July holiday. Now, most seasonal charts will show you that trading just a couple days before the 4th and a couple of days after the 4th tend to be pretty bullish. But the problem with that is that everybody now knows it because I've been seeing it on Twitter all over the place. Everybody's talking about, oh, it's so bullish, this week, right? The week of 4th of July holiday. So bullish, always so bullish. 2% on average goes up. Well, if everybody knows that, then everybody's already in the market. Nobody's left to buy anymore. The market's not going to keep going higher. It's at least going to go sideways. So looking for a sideways, choppy pullback or flag pattern, or not anything deep, not anything scary, not anything that even we really need to hedge against, but just to pull back into the all-time highs, which is around 6160 for the micro E-mini, that is, and testing that level. Do we dip below it? We might for a day or two or on an intraday basis, but I really don't think that with the market being strong this way with the momentum to new all-time highs, the volume balance has been good. And the reasons why it's strong are really central, right? They're systemic reasons. The tariffs deals are starting to come in. At least we're getting hints that they're starting to come in. And rates are, I'm sure they're at a peak. Fed is more likely to cut than to raise rates. The jobs market is still pretty good. We're not exactly in a robust growth phase right now for the overall economy, but that is likely coming. We get these tariff deals down, we get the rates coming down, we get the big, beautiful bill that I assume it's passing. I've been hearing positive things about it. Is going to lower our taxes and lower regulations and should also help some industries that have been a little bit sluggish, like healthcare and energy. And so all that's to say, there are some very good reasons for the market to be up this high. It's not like we're overvalued. It's just that the momentum's a little bit too hot for where we're still at, right? We're still at a place with some pretty high interest rates. We still have a sluggish housing market. The GDP growth has been not that great. Inflation is still a little bit on the higher side. So there are still some reasons for a bit of caution. Also, I need to say that while the S&P 500 is up at all-time highs and the NASDAQ is up at all-time highs, if you look at how many stocks are actually in uptrends, like above their 200 or above their 50, it's getting better. It is getting better, but it's still not that great. We're not getting the kind of numbers that you typically see in robust bull markets. Now, I've been saying that I think we're in a brand new bull market that started in April. So, and there's still a lot of companies that need to catch up with that, and they will. But when you have about 56% of the stocks trading above the 200, and which is 44% below the 200, that's not great. But it was worse a couple of weeks ago. It was under 50% a couple of weeks ago, and now it's a little bit above 50%. Maybe it's not 56. Maybe it's 52, 53. Anyway. Okay, so that's my thesis. Short-term pullback starting maybe in a couple of days into next week. Not a tradable move, but we do want to be a little bit cautious. We don't really want to get into the indexes right now. I think we can still continue, as we've been doing, trading individual companies, individual names, and I've got a few that I'm going to suggest here in just a minute. NASDAQ, pretty much the same thing. It is 4 or 5 days now above all-time highs. It's a nice clean breakout. Volume balance is very good. Starting to taper off again, which is another indication that maybe everybody's already in. Everybody's already jumped into the market, and when that happens, there's nobody left to buy, and the market doesn't necessarily mean it's going to crash or roll over or go down to the lows, anything like that. No, 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 no. But it just means that this robust, every day going up is probably ready to take a little bit of a breather. Beautiful market though. And have I been trading it perfectly? No, absolutely not. I never do. But we've been making some really, really good buck. Every day we've been hitting new all-time highs on the performance basis, and you just can't ask for anything better than that. Now let's take a good look at the small caps, because I do think that while I want to avoid the bigger indexes, the small cap index may still have some good upside. This box right up here, this kind of pinkish or salmon colored box, is a volume shelf. And when prices get up into that area, typically it starts to cool off or even roll over for a little while. But we're not there yet. And you can see that there is this inverted head and shoulders, which if you look at the depth of the head, which is your target, your extension, right, above the neckline, it's all the way down here to 1750, and the neckline itself is about, I'm just rounding off, 2100. That's 350 points. On top of 2100 is 2450. And we're under 2200 right now. So another 250 points or so of upside in the small caps is, it's very, very possible. However, I do think that that's a pretty good volume shelf right there. It's likely going to get stuck right there. And then the target price is up here at this even darker color box. That means that's a little stronger of a level of resistance. So it might take a little while, maybe a month to work through this volume here. It'll chip away, right? It'll get a little bit up in and then fall back, get a little bit up in and fall back. And then once it gets through there, it should get all the way to the target. So I think if you want, you can buy IWM calls, you can buy TNA, you can buy M2K, the micro E-mini, and hang on to it for a few months, right? Maybe even to the end of the year, because I do think that the rest of the year, after we get through maybe a little bit of a rocky July, we should be really on track for a very, very nice end of the year rally. Okay, so that's the small caps. I don't think, in my opinion, it's really a buy today. Let me just drill down to the hourly chart and see what that looks like. When in doubt, either go out to the weekly chart, which we won't do, or drill down to the hourly and see what's going on underneath the surface, right? So you've got, it's kind of a roller coaster ride, but you have a sequence of highs here, couldn't get up through that level, back down into the pink zone, volume shelf, rallied up, now it got through the level, higher set of highs, coming back down, higher low, that's good. But unfortunately, it has not made yet a higher pivot high. So now it might be in the process of doing that. It got up into this volume shelf, pulled back down. Now we're seeing a big green bar in the last hour. That's a good sign. It needs to get back up through that volume shelf and print a higher high to keep this sequence going. If it doesn't, if it prints a lower high, then we're more likely going to see a lower low below that level right there. So I think it's just little bit, it's not a no-go zone. If you're already long, I would hold, but it's not really set up just yet for a new swing trade. Let's get back to the daily chart. Quick look at gold. So I was in some gold that I got out a couple of days ago up in this little pivot area here. And I had bought it, it was way back, it was some micro E-minis, and I just kept rolling it out to the next contract series. We were in gold in the live trading room for a couple of weeks. We were in GLD calls for a while. That was, I think, a while back. And I just had on the MGC micro E-mini and just held on to a couple of contracts through all this sneakiness. But I finally decided, I think it was Wednesday or Thursday last week, just to get out and take some profits there. I was in it a little too long, and thankfully I did, because Friday was bad. But look at this move today. This is a very nice looking reversal bar. It's bullish. It took out a bunch of lows underneath Friday's low and has rallied back up. And anytime you open within the bar of the previous within the body of the previous bar, go down and flush out a bunch of new lows, and then rally back up to close within the body of the previous bar. That's a bullish reversal bar, especially if it's at least about a month of lows that you flushed out there, which it looks like it is, and on pretty good volume as well. So I do like gold for a short-term swing, and maybe we'll be in some gold before the end of the day. Let's see, we're in some silver in the options room. It's holding up very nicely. Oop, I just bought something that I'm not sure I want. Anyway, it's up, holding up very nicely. You know, you can see the difference, right? Gold is down here in the pink zone of an uptrending LRC, which is oversold, and silver is up here near the top of the LRC in an uptrending LRC, and it's just above the 21. So stronger chart. Silver is outperforming gold. That's actually a good thing for the overall economy. Gold has been outperforming silver for months and months and months. And if silver is outperforming gold, that's a sign that the economy, especially the industrial sector, the home builders and so on that use silver and a whole bunch of processes, is starting to pick up pace. So that's a good sign. I like it. I like silver also as a trade. Okay, we're along Bitcoin. It was a little more robust earlier. It's been kind of gets up a little bit. And then, let me show you what's going on, and I'll show you exactly why it keeps floundering here. Maybe it's the 2-hour chart that we need to look at. Yeah, it's a 2-hour chart we need to look at on this. Well, this has shifted a little bit, but so there was a volume shelf right up here on these highs. And then when it pierced up above it, that volume shelf disappeared, and we have this shorter volume shelf right here. But you can see volume shelf upon volume shelf upon volume shelf. These tend to act as resistance. It takes a while for the stock keeps pressing up into that first one, and it erases some of the supply that's there, and then it pulls back down. The nice thing is that we've got a support shelf down here below, which is not that far away. And every time it gets down into that, it bounces up nicely. So I think it's just a matter of time, but it could take some time. I think Bitcoin is a pretty good place to be for July if things get a little bit squirrely with stocks. I think Bitcoin is it's not exactly a safe haven, but it is a pretty decent place to put some cash. So we're long Bitcoin in the live trading room, and I have no desire to cut that loose, so we'll hang on to that one for a while. All right, let's go over to Green's list, and we'll sort these worst to best. We've got a few of these. They're DNA. You know what? I'm going to take DNA off so I don't have to cry every time I look at it. RGTI is a quantum computing name. We've had shares of this in the live trading room. We're not long now, but we are long INOQ, which is the one right underneath it. Same sector in the live options room. We've got some option calls there. And I think RGTI, I mentioned it this morning in the live room, that INOQ was up about 6% this morning, right off the bell. RGTI was up about 1.5%. I said in the room, hey, it looks like RGTI is going to play some catch up. Well, it did more than that. It not just played catch up, it actually surpassed INOQ, at least for now. So the bigger picture here, this is a 2-hour chart. Let's take a look at the 1-day chart. You have some nice stuff going on here, some bullish stuff. Nice rounded bottom with a rounded handle, right? Cup and handle. You could even call it a continuation inverted head and shoulders, but it's just a very nice pattern. Anything that has a rounded bottom is very bullish, very bullish. A rounded top is bearish. Rounded bottom is bullish. And we're now approaching, we're in a volume shelf, but it looks like it's piercing through that pretty quickly. And then we get to these lighter pink shelves here up here, which should break to the upside pretty easily. So INOQ you could buy. RGTI pretty much is going to be the same thing. It's a little bit of a different formation here. So it's not a rounded bottom, but it is starting to form the handle of a rounded cup with handle, or we could just call this a pullback with a tight base at the 50, the midline of the LRC. Either way, it's bullish, looks good, it's a buy. Jump on board before it gets too far away. We're long MSTR, and we're long calls in the live options room. and it's just a beauty, right? And here's the thing. So Bitcoin is a little bit weak today. It's green, but it's just barely green, and it was a lot stronger overnight. MicroStrategy is pretty much of a play on Bitcoin. So if MicroStrategy is up big today, and it is, and Bitcoin is just, I don't know what Bitcoin is doing. I think it's reacting to some crypto news on in some regulations. There's been a lot of stuff coming out of the Trump administration regarding crypto. So maybe something there is a little bit amiss. But if MicroStrategy is rallying today, and they only have one reason to rally, and that is that they anticipate Bitcoin to go up. So I think it's a good lead for Bitcoin. If you're not long Bitcoin or MicroStrategy, I would suggest getting long one at least of those. You don't have to play MicroStrategy. It's a $400 stock. You can do MSTX, but that's a leverage fund, so make sure you cut back a little bit on your size. We had shares of NBIS, and we did take profits on it last week, and it just, of course, gone back up again. It was just a little bit too high for my taste, and it does have a tendency to get slashed pretty quickly. It is a momentum play, but it's getting a lot of good attention. A lot of traders in my pro group are long shares of NBIS. And if you look at the long-term chart, now here's where you can look at the weekly chart. You're going to see that it's well below all-time highs, right? Which are up here near 90, and it's only at 54. So there's a lot of upside there in terms of getting back up to where it was before. And yeah, that looks good. Oh, there's so many good plays out there. I'm just a little bit worried about the market itself coming back in. Carvana, of course, it's been, well, I don't even know what to say about Carvana anymore. It's one of the most hated stocks out there. And there have been good reasons to hate it, but I feel like it's making a comeback here because it is up near 52-week highs. It's had some really good momentum, and it's a lot of fun to trade when it's moving like it is today. I wouldn't really buy it right here. The best time to buy it would have been on that dip right there, which was a Fibonacci to the very first level, the 32 level, or 31.8, whatever it is. That was a time to get into a lower risk position. I wouldn't buy it here, but if you're long, you can hold it. I really like Oracle. Lots of good press. It was just a gap and crap today, so we have to wait for this guy to come back in. It'll probably test 216. And then we can think about getting long Oracle. But it's got, Larry Ellison, second wealthiest man in the world right now, is having a nice go. He's having a nice run. And his wealth is only about half of what Musk's wealth is. So it's all relative. So we bought a little bit of app today on this pullback breakout. It was a good trade. It took out a whole bunch of highs right off the open, and it's just kind of recoiled back underneath the 21. So that's a little bit disappointing, but we've got a pretty wide stop on it. I think we'll be okay in that position. We took profits in SMCI last Friday when it was starting to reverse. I'm kind of glad we did. It's a higher risk trade, and I'm not sure the fundamentals support it being up here at around 50, but we'll wait for a pullback to get back into that one. We have some ZETA on, which is a speculative play. It shot up really high for us. We took profits, and then we jumped back in on a fib retrace last week. We're still holding shares. It's just a little lotto, but it looks good. Tigo, one of my new favorite stocks right now. It was mentioned in the live options room. I didn't know anything about it. Haven't drilled down into the company at all just yet, but I really like this chart. Nice uptrend. The MAs are stacked, pulling out of a volume shelf. Got a clear line of support down below, not too far away. You've got resistance up above, but it's getting there, and I think that's going to break out and move up, probably up here to the blue zone at low 40s. Let's see. CRWV. So CRWV is, this is one where it's an IPO. You really can't play the daily chart. You've got to go down to the hourly and see what's going on. And what I like about CRWV is that it has a clear line of higher lows, and there is a clear pullback. clear pullback there down toward the 21 period moving average. It's getting tighter and tighter and tighter. And it's, the risk to the downside, of course, is pretty good, but you can keep your stop underneath that support low for a fairly low risk for this stock, for a very low risk position. Go small, and I wouldn't kick anybody in the pants for buying some shares right here at the 21 period moving average. What else looks good? So we were in NTNX. We took our profits, and of course, it just continued higher. The problem is Friday, a lot of stocks were down, and Friday was a kind of a profit-taking sort of day. And so we didn't want to overstay our welcome in a bunch of big positions that were showing some nice profits. So we did take profits and put that money into the bank. And the risk, of course, is that it's just going to continue higher. Circle is another one that you can't trade the daily chart. You go to drill down to the hourly chart. And if you look at this one with the fib retrace tool overlaid, right? You can just do the whole IPO stretch because it's just been an uptrend from the get-go, from day one. So put the beginning of the tool down here at the opening price on day one, stretch it all the way up to the highest high since launch, and you can see that it dipped down here into this green zone, which I call the money zone. Money zone is between 50, 0.5, and 0.618. Yeah, 0.618. That's the money zone. And you'll see that often when a strong momentum stock pulls back into that zone, it gets right back going again. Now, I would trade the hourly chart on this. I would put my stop below the 618, although that's a little bit wide, but just go small, put it below the 618, and then get out in the mid 200s or so. And it's only 180 right now. That's a big move. It's a lot of fun. When we did catch a move in Circle a couple of weeks ago or last week, and it made our day. Okay, back to the daily chart. Just a few more charts, and then I will take some requests. Make sure that I'm not missing anything. Oh, I do want to show you those Rex funds in just a minute. Just a few others I can recommend. We're long TOST in one of the rooms. Oh, we're long calls in the options room. And it's doing a nice high tight base off of a breakout, right? Oh, above that level, it broke out. It's forming a nice rounded bottom base, and it got a little squirrely last week. That was a nasty day, very nasty day, and I'm not sure if we were long shares in the live trading room or not, but somehow we got bumped out of a trade somewhere along the line, and then it reversed right back up, and it's doing really well today. These are daily bars, so it reversed back up on Thursday, followed through on Friday, and it's a little bit of a gap and crap today, but I like the fact that it's up here in that volume shelf that should start to give way. I like TOST for a breakout. It also got some really good publicity today on the social media boards, and the call flow into the name has been very, very good. Okay, what else did I want to show you? Google. We did buy some Google today. It was a gap and crap. I didn't get us in right off the open, but it was close enough to be a bit painful. We've got a wide stop on this because we're using the leveraged ETF for this. And it's a light volume day. It was such a beautiful setup on Friday, right? When a lot of stocks were falling on Friday, Google was rising. It was one of the strongest mags on Friday. And it was a big green stick, and it was a huge, huge inflow of volume on that day. So I just think this is a little bit of back and fill, a little bit of profit taking, a little bit of risk management going on here. But I really think that if we keep our stop where it is, yeah, it's a little bit far away, but it's a small size position. We'll be okay. We just need to have some patience with it. That bar right there, big green stick in price, big green stick in volume, that's not to be denied. We just ran into this volume shelf and need to wait. Just need to wait on it. Let's take a quick look at Tesla. We're actually short Tesla and in the live trading room, and for good reason, right? It has broken out of a I don't know, call it a bear flag, call it a relief rally, up into the volume shelf, right back down again. When you see a stock get into a volume shelf and reverse and not come back into it, not a good sign. Broke the 21 as well as the support line and right at the 200 period moving average. So that could act as a floor. But we'll see. If we can get down below that, we should hit the volume shelf down here around 285. Okay, that's all I wanted to talk about today. So let me see what you guys are interested in. Oh, and while you're typing in some ticker symbols, let me go over to, I think I have them here in the indexes, those Rex shares. So here's FEPI, FEPI. Well, that's interesting. Right? So it's well below the all-time highs. Right? The all-time highs are way back here in the 50s. No, FEPI is not. It is a FANG, but it's not. It's not leveraged. No, it's not leveraged, and it's an equity premium income fund. So I think what's going on here is that FEPI is not really the one you would want to use to leverage a bullish move in the FANGs. This would be a place more rather to park some cash, and he's probably using something like a covered call system on the MAGs. He's selling premium, which is what the equity premium refers to, I assume, and then you get to keep those dividends, right? The premium on the calls, but that limits your upside, and it doesn't mean you're going to have a whole lot of capital appreciation. But as you can see, it's moving in the right direction. So you're probably better off if you really want to leverage a move in the MAGs, is to either use the non-leveraged MAGS or the leveraged BULZ. And you can see both of those are showing red today. So MAGS, so the Google's not the only one that's having a rough time. Got up into the very dark purple volume shelf right there, and it looks like that might be it for the MAGs. If the MAGs start falling, then coming back in, you're going to see the indexes come back in, and the one follows the other, and that's kind of where I think we're going to go over the next few days. We're also heading into some big jobs data that comes out on Thursday. Then we have the holiday, and then next week we kind of mop up the mess. Okay, shiny, the gold, right? Looks pretty good. Actually, I wouldn't mind getting us into this little gold pullback here. And it's uptrending LRC. We're down in the pink zone, and this is a leveraged instrument. We don't need to buy a whole lot. Then COII, it's got a whole bunch of these. COII, NVII, MSII, TSII, these are all stock-based equity premium funds. So this is coin. So you get the capital upside on coin, although it's going to be limited, and then you get income from the selling of calls. There's one for NVIDIA, here's one for MicroStrategy, and here's nice big green stick today. And here's one for Tesla. CEPI, that's a crypto equity premium. So I don't know what he's doing with that one, but that actually looks pretty good. Yeah, I like this sequence of higher lows. A nice little cup right here, or handle, I guess, into a volume shelf that's moving into it. Looks like this wants to get up to about 42, 43. And then you've got a gap up here to 45. Yeah, I'll dig into these and let you know a little bit more about those when I find out what's going on. Okay, so let's take a look at what you're interested in. Reddit. I had this one on my radar. Yeah, I'm just playing around with this Elliott Wave tool here. So it actually tagged. I had this on a few days ago when the stock was down in here. I thought, you know what, this might be a 3-wave up. It's got a little more upside. It tagged that to the letter, to the penny, which, if I'm right, means that the next move for Reddit is going to be a pullback to about 140. Right? Stock is currently at 150, and that would be a place to buy it. And then it should be back up into like near 170, right, for the final wave of this impulse sequence. I'm not an Elliott Wave theorist, and I don't even think that there's much value in Elliott Wave, to be honest. But it is moving in that direction. It's moving in that sort of 5-wave sequence, which is not an uncommon thing. And that would mean that you don't want to buy it today. You might even want to take some profits if you're long. We can be bullish on Reddit going, out several months, but I think in terms of a swing trade, you're probably better off shorting it here than going long. Let's see. So ETHU, I have a rather uncomfortable relationship with this one because it gave me one of my worst losses earlier in the year. I was long and stupidly I held through a big overnight gap, which of course that's not my fault, but I thought, well, I'll hang on to it for a few more days, and it just kept going down. So anyway, in terms of the overall chart, let's get a little bit of a bigger picture. Yeah, I'm pretty sure it was back here in January, February. So I bought it down here, right? ABC pullback, nice looking breakout, almost up there to break. I bought it in this area, probably about 150, 145. And then I had to sit through that overnight drawdown. And then I thought, well, I'll just hang on to it for a little while. And then it just started going further south. That's when I got out. And that was a stupid trade. So, but that's behind us now. It does happen. It happens to every trader, no matter how experienced you are. So in an optimistic world, I would say that it's printing a cup and handle, but not really that convinced that that's what it is doing. And this could be, it's in a long-term downtrend. It's not looking that great. This could be your relief rally, and now it's starting to go lower, right? A, B, C waves down before it hits a double bottom down there near 20. So that's possible. I don't see anything in the chart that leads me to believe that's going to happen as a path of least resistance, but it's not showing me. I mean, there was a big green volume stick down there, but that was on a gap down, and it's coiling up right here quite nicely. I'll tell you what, I would say maybe there's like a 52% chance it's going to go higher and a 48% chance it's going to go lower. And if you want those odds, that's fine, but I would just go very small, very, very small. And I would put a stop. You're going to have to do it wide. I would put a stop under 42. Okay. CRNC, I don't know this one. Well, I guess I know the name. Yeah, I do know the name. Oops. We haven't traded this one in ages, if we ever have. Okay, so there is some good stuff going on here. Obviously, it's in a downtrend, but the 21 is above the 200. I don't have my 50 on here. Where's my 50? There it is. Okay, so all three moving averages, they're stacked, right, in the right direction, and they're all moving higher. That's all good. The LRC is the one that's not joining the party. And you are up here in this range that looks like it's been resistance for a long time. So if you are patient, it should break through that range because it keeps printing these higher lows, right? Here's your low, low. Here's a little bit of a higher low. I mean, higher low. This is a little bit of a higher low, and then we're back up to the highs of the range. So when it keeps getting back up to the highs of the range and it keeps creeping up into that volume box, the more times it does that, the longer it stays up there, the more likely that is to break out to the upside. So I would say it's a hold. I wouldn't kick anybody for buying it here, but just keep it small. It looks to me like I don't know the company. I don't know what's going on. I don't know what the macro is. And I have all kinds of tools, right? So if I'm uncertain about a company like this, I plug it into different websites and I get their readouts on, whether the analysts like it, whether the fundamentals are decent, evaluations, what do the social media boards say about it, right? I can crunch all that data, and then I'll get a bigger picture of what the market is thinking about this, and I would need to know that for this, and I don't have that knowledge. So in the absence of that, I would say just on a technical basis, yeah, you can nibble with a stop. Where would you put your stop? I would keep it under the 50-period moving average, like around 880. And then trail it up from there. Let's take a couple more, then I really need to get back into the room. Sand. Oh, this is a Brazilian bank, I'm pretty sure. Yeah, so good, strong chart. Stacked MAs, they're all moving in the right direction. LRC is up. It's forming, I would say, this little high tide base. It's fairly short, so it hasn't really had a chance to develop. It is under a pretty strong volume box, but I like this as a breakout candidate. Personally, I like to get into a position prior to breakout with the intention of holding it through the breakout and then kind of taking it day to day, because a lot of times it'll break out and you'll get in and then it's a trap. So I'd rather get in with a lower risk entry. This is a pretty good entry. It's right up against resistance. I would put my stop underneath the 21 and trail it higher if it does indeed go higher. That looks good. I like that setup. Very bullish and a very strong chart. So I want to see AVAV because, yeah, this is why. Seeing a lot of reference to this in my in my Twitter account. People are already long, they're enjoying themselves, they're high-fiving everything because of all this big upside. But this is not where you want to be. I mean, this is not where you would want to enter. This is where the bag holders enter. So don't be a buyer today. Wait for it to cool off. You kind of have to know. I mean, it looks like it's up on earnings, so that's very good. Now, here's the rule on a power gap on earnings, which is what this is. And that looks like it's to all-time highs, so that's also very good. When a stock gaps up on earnings, you put a line underneath the bottom of the gap, and it's not likely to cross over that line. And if it does, it's an avoid, right? If it gets into this gap, I mean, you can let it get in a little bit, but if it gets more than like 40% into the gap, you want to move on to something else. When it's up like this, your risk to a pullback is very strong. So I wouldn't be a buyer up here, but I would wait until it cools off a little bit. And it looks like the all-time high. I assume that's all-time high. Where did my thing go? Right there. So that would be a natural target for it to pull back into. But you know, if it's really strong as it is, it may not get that far down. So what you can do is you drill down to the hourly chart and you apply your Fibonacci tool on there. I would start with the earnings day. Pull it up to the highest high that you've seen there, and then you wait for it to pull back at least to the 31. Here's the 50, and here's the money zone. Is it going to get back into those zones? I don't know. We don't know. If the whole market starts cooling off, maybe. This is a foreign stock, so it's more susceptible to what's going on in Brazil than here in the United States. But that's how I would play it. If I'm already long, however, I wouldn't sell it. I mean, I probably would, actually, because that's what I tend to do. I tend to sell into strength, and then I just cry while I'm seeing it go higher. But if I am long, since I'm not trading my own account, I would say hold on to those shares and just keep rolling your stop higher. Okay, great looking breakout there. And when it happens on earnings, that's even better, because what the market is saying is that, you know what, you're no longer a $190 stock. You're now a $280 stock. We're going to reward you for that because you've really worked hard to make your company grow that fast. All right, I better leave it there, guys. I'm going to let you go. God bless. I will produce this and get links into the main room, and then we'll get back to trading. Bye for now. See you soon.